Alright folks, it's been a while, so I thought I'd give you a quick update. When was it last time? I can't remember. Probably a couple of months, I'm guessing. So I thought I'd just give you an update of what I've done since the last video and a few thoughts I've been having recently. So what have we got here? So in April I sold merchants and the proceeds went in... Oh right, yeah, so this is just because we're in the new tax year, so I got rid of the rest of my merchants' trusts. No, sorry, no, it's not because we're in the new tax year. Or is it? I can't, this is the problem doing videos so long after you do stuff. Right, okay, it was the new tax year, but I sold merchants to realise the gains and put it into... But I didn't have any ISA allowance left over, so that's why I put it in ACWI, the global tracker, but outside of tax wrappers. And I think it was just to realise the gain, and then obviously the ACWI holding starts at the cost basis. Starts at a profit of zero again. So you know, it's if I sell it next year, I'm doing okay on the profit front for capital gains purposes. Sold all of proceeds. Right, I don't know why they're two different dates. Oh, right, okay, no, it makes sense, right. So I obviously did it first outside of tax wrappers, and then I did the rest of merchants inside tax wrappers. Sold it all, put it into the total return portfolio in whatever weightings got me closest to the target. And then on the 30th, what did I do? I sold about £5,000 worth of Scottish mortgage and put it into ACWI. Things, you know, it's just on a good little run. You might have seen my post from a little while ago saying that Scottish mortgage got to an all-time high. It's probably below that all-time high now. So I just top sliced it. I'm getting a bit nervous about the SpaceX IPO sort of tanking after it happens. Could go the other way though. So I mean, what I was thinking was I'd like to get myself into a position where I've kind of trimmed enough of it to where I'd be happy either way. So like if it kind of flew high and Scottish mortgage flew high with it, I'd be happy because I'd loads left over, so I still made a good gain. But then on the other hand, if it dropped the price of Scottish mortgage by 10%, I'd be also happy because I can put the money that I'd sold from it back into it at a lower cost. So I'm thinking, so that's what I was thinking. And then on the 5th, I sold £7,000. Oh yeah, the whole of my what was it? It was THR, Target Healthcare REIT. So it was homes, nursing homes and stuff like that. It made a decent profit. What was the profit? I think it was about 16% maybe. THRL, 15.29% profit it made me. So I just figured it was as good a time as any to take a bit more of my money out of my own choices and just go into the ETF portfolio for total returns. And then the 26th of May, I sold UPS. It was only 2,100 quid. It was such a small holding that I figured I either have to sell it or I have to add more to it so it's more meaningful. And so I decided to sell it because it made a loss, but the thing I put it into, Pfizer, had a similar performance. So it's not like I made a 10%, 11% loss, but I mean the thing I went into was also as downtrodden as it, so it didn't feel so bad, and it was yielding slightly higher. So that added a slight bit of extra dividend to my portfolio. That did. And then on the 29th, I sold all of my HSBC and put that into the total return portfolio. So as you can see, I'm just making more and more moves to get more and more out of my blue section, which is now 12.21%. It was over 15% on my last video, and getting more into this total return portfolio of ETFs, 72.49% now. Yeah, so on the Scottish mortgage front, as we can see, if we go further back, I also sold. So I sold £5,000 on the 30th, but I think I also sold about £3,000 on the 7th of April. I've already told you about that one. So yeah, I've got there like 5, 6, 8 grand, and I'm thinking to myself, I've still got a nice 8.22% holding. It's already gone down a bit recently. So I'd be happy if it went up. I'd be happy if it went down because I could put that. In my head, I'm thinking I've got £8 there that I've put into Acqui from Scottish Mortgage that I could just switch straight back again if Scottish Mortgage lost 10% because of SpaceX. And I'd also be pretty happy if that £39 there went up because of SpaceX, if that's what happened. So it just feels like either way, I'm set. So it's like emotionally, I'm really not bothered what happens to the SpaceX IPO. I mean, financially, obviously, it's better if it goes up because I've got 40 grand in it, and I've only got 8 grand that I've kind of earmarked for going back in. So I should really be hoping that it goes up. But to be honest, I'm not that fussed. I quite like the opportunity to rebalance back into it. So that's what I've got here. I've got a little cell here calculating. What I'm actually thinking is 8% of the whole portfolio is what I should rebalance back to when this big number gets big enough. So at the moment, selling £1,000 is what gets me there. So if it goes to plus 1,000 or minus 1,000, I can buy or sell it just as like a rebalance. So that's what I'm thinking on the Scottish Mortgage / SpaceX thing. As you can see, long term, I'm starting to think long term I will just get most of my money in this because it's probably better for me. And another thing I've been thinking about is, at the moment this number's nice and low, so it feels like I'd be happy to keep selling even if it went up to 3%. But in the really, really bad times, I'm not sure how I'd feel about selling. Like if that number there grew to like 4.5%, what I'm thinking is I'll limit myself to 4.5%. So in the really bad times, which will happen at some point, be it in 4 years, be it in 10 years, be it in 20 years, at some point there'll be a really bad run like in the dot-com bust or the financial crisis, and that number's going to go up to like 5%. And I'm thinking maybe I'll just, if I can hold my spending back, I might just limit myself to 4.5% there on any given month. I'll just limit the withdrawal to 4.5% if it was expanded over the whole year. But I don't know. I just feel like I need some when it was coming all from dividends, like in Scottish American and BlackRock Smaller. It felt okay in the bad times because it was mostly covered, or at least it would get back to being covered by dividends eventually. It felt like there was some real fundamental thing about the companies that were held that made these higher withdrawal rates sustainable. I know it's not true really, it's just kind of a mental game. So what I've done is I've decided to start tracking. It's a very unsophisticated and probably flawed way of doing it here, but I just wanted to give myself some sort of metric from these ETFs, some sort of number that I could get a grasp hold of. And so what I've done here is the closest thing I could find is just finding the price to earnings ratio that's given on the fact sheets of these ETFs, turning it on its head and working out the pounds earnings of my holding. So I've just write down the number of shares I owned on the 29th of May, well, just the end of May fact sheets for each of the ETFs. So I look up the fact sheet to find the price to earnings ratio, which they quote on them. Well, actually, I think VHYG, I think that's just on the ETF's website itself, rather than being the fact sheet for the index. I think I got this from the index's fact sheet, so MSCI, and I got this from Vanguard's website for the actual ETF. And then obviously for VAGS it's a bond fund, so it's just the yield rather than getting a price to earnings ratio. Just got the yield and got like a pound coupon that my holding would be paying would sort of estimate being paid based on the price on the 29th of May. So it's like the reciprocal of the price to earnings ratio multiplied by the value of my holding on the 29th of May. That's why I've put the date in there when I look up the price of Acqui. And so what it's giving me is an estimate, a very rough estimate of the earnings the companies that my holdings hold are earning. So obviously each month, so I'll show an example of me looking up the numbers here. MSCI Acqui Fact Sheet, I think I found it. Yeah, here we go. Oh, that was easy. And I just used this number here, 23.77. I didn't use the forward because that's kind of a prediction. This is the previous 12 months, I think. So yeah, I just put in the number 23.77, and that's from the date 29th of May, which is the last trading day of the month. And as we can see here, what I'm currently selling from that portfolio is 8,552. Obviously, that'll go up each year with my chosen percentage, and that's currently 61.24% of my rough estimate of the earnings. Now, this is always going to be a underestimate as well, because obviously Scottish Mortgage doesn't give us any of these numbers, and it's all very growthy anyway. But obviously, they do have lots of earnings. Just I can't get that. I'm just going to use that as something that's just kind of speculative. So actually, this number's always a underestimate of my percentage withdrawal of the earnings that the companies get. So I think I'm hoping that by tracking this number, when I get to the really bad times, I mean, obviously this number, it's going to be lagged. It's going to be lagging, isn't it? If the bad times come and then the company's earnings go down, overall, the whole portfolio, it will be a lagging indicator, but at least it'll give me something to kind of track that might make me feel less bad about selling, the monthly amount I sell being a much higher percentage of that total return portfolio. I'm hoping, but so I'm just prepping now to monitor. And the other thing is, it'll give me a better feeling to see that number go up, hopefully. Hopefully that number will go up. Just like the dividends that the underlying portfolio of Scottish American or BlackRock smaller companies, the overall revenue of the dividends they get paid within the portfolio gradually goes up, or not gradually, it's not in a straight line up, but it'll go down some years, but overall it'll go up. So I think seeing that number go up, hopefully, rather than just seeing the share price, which doesn't, all that tells me is that things are popular. It doesn't tell me that the companies themselves are earning more money, which is the thing that gives me confidence in withdrawing from the portfolio. So I think it'll be good for me just to see, hopefully, this number go up and up, down some years, up overall though, the long term. So I'm hoping that by tracking this, it will just give me some confidence. I've repeated myself a million times, and I'm going to stop now. So there we go. They're just some of the thoughts I've been having, because obviously, as you can see, the past few months, I've got more and more of my cash into this now. So the higher this number, the higher my income that's coming from that gets, the more I start to think about, what happens when it gets really into some bad times. Yeah, so I don't know, that's just some thoughts I've been having, and I realised I hadn't made a video in a while, so I thought I'd talk through those thoughts. We can see here that I'm on target for a 3.52% increase this year. I'm probably going to increase that by about 6%. We can see here, I've just been tracking this here. So the total return portfolio, if we add 6% to it, that would be a 2.62% yield. At its peak, that was only about 2.5%, so really low starting yield, even with a 6% increase next year, which will start in the 7th of October, or was it the 6th? Beginning of October, or the end of October will be the first withdrawal from that portfolio that I'll probably put a 6% increase in. Because even if stuff goes down, it's been as high as 2.5% this sell has, when I add 6% to this yield here. So it's kind of like doing starting your retirement on a 2.5% withdrawal rate and adjusting for inflation, pound wise. It's kind of a low number. So hopefully I can increase it by more than inflation, which that 6% will be. Man, it's been a while since I made a video. I'm rambling a lot. Hopefully it's coherent enough. But yeah, I think that's all the thoughts I've got at the moment. And I will leave it till next time. See you later. Bye bye.